Well, hello, everyone. I am Precious Waters, and I have my good friend here, Terry Graham, with me, our life insurance agent today. And welcome to Life Insurance 101. Do your family a favor and get life insurance. We've invited the Wealth Hub. I'm a part of the Wealth Hub, as you all know, one of the leaders here at the Grow Gathering, along with Deaconess Jade Williams, and she will be on in just a little bit. But we wanted to bring you something different today. So today, Terry Graham will be sharing with us about life insurance. Before we dive in, Mr. Terry, tell us a little bit about yourself. Of course, Elder Eddie and I, we know about you. We've been friends for years, but tell the people a little bit about yourself and what made you get into life insurance.
Okay. All right. Well, thank you. And thank you for having me. I look forward to sharing the information with you guys. And here, my big thing is I started off with life insurance because I'm an investor. I'm investing in mutual funds and things of that nature. And I wound up in the route I had to take to get my investment license started with life insurance. So then, as I was going through life insurance, I learned so much to get my life insurance license. I said, okay, I see now the importance of life insurance. And that opened up my eyes to the different types of life insurance. And I started that journey about 9 years ago. And then with that, of course, got more into investing. But I also in the more I invest, the more I see the importance of having life insurance. For younger people, there's a certain purpose. For older people, a certain purpose. And we'll talk about that in more detail. And then my wife is also a life insurance agent. We work together through Legacy Builders Wealth Management and provide people with different services from life insurance to investment services. So the big thing was I learned the importance of having life insurance. Always had it, but didn't really understand why I had it. I just know, hey, get life insurance, have life insurance, but didn't know the importance of how much to get, what the importance of how to properly protect you and your family, and then how to use it later on, depending on what type of insurance it is for retirement purposes, college funding, and things of that nature.
Oh, that's awesome, awesome. Well, thank you for sharing that. Just wanted to give everyone, just a little background. This is something that you just didn't get in, so you've been
Right.
in some years, experience, and thank you for sharing that. Whenever you're ready to jump in, Terry, go for it.
Okay. All right. Well, let's start this off Life Insurance 101. Here, seminar workshop disclosure. Basically, I have to share that information and you all can read through that. And if you're playing it back, you can take your time and read through it. But we just have a disclosure you have to share. The other thing is picture of myself and my wife. Also, what I do, I'm a life insurance agent, but I'm also an investment advisor representative. My wife is a life insurance agent. Both of us work with clients to help them with their future finances through life insurance, through annuities, through mutual funds. Um, and we're also based out of Atlanta. Now, the big thing I wanted to start with a bang. GoFundMe is not life insurance. I've seen this happen many times. I've seen where people start a GoFundMe account and they get more than enough money to do what they need to do. I've also seen where they start a GoFundMe account for funeral services and they never reach the amount they need to reach. They have to come out of pocket. I think what has happened in the last at least 10 years or so, people have thought that GoFundMe is the way. I don't need life insurance. I'll just open up a GoFundMe account and people will give money to me, and that's not the truth. It happens to some, but it does not happen to all. And it's not a good option to fall back on for life insurance, especially if you have children, family members that you love, and you want to make sure that they're taken care of once you are no longer here. So, first thing is GoFundMe is not life insurance. Don't try to use it as life insurance. Make sure that you are using life insurance for life insurance. And that's the big thing. So GoFundMe is not life insurance. I want to get that into people's head. Then next thing is life insurance. Do you need it? And the simple answer to that is yes. We all need life insurance in some way, shape, and form. We just had to figure out what type, how much, etc. But you definitely need life insurance. You definitely want to sit down and plan what type of life insurance you need, how much do you need, and how long will it last, and so things of that nature have to be looked at. So yes, everybody needs life insurance. The other thing here is 85% of consumers agree that most people need life insurance, which is a true thing. Then life insurance really is not as expensive as what people think. We waste especially as Americans waste a lot of money. You can talk about clothing, you can talk about going out to eat, you can talk about and in the black community we like Jordans, and I like tennis shoes and clothing of that nature. But I also like to make sure my family is protected. Life insurance pretty much is not too expensive. It costs less, nearly three times less than what most people think. And the older you get, the more costly it is. So you want to get it as young as possible. And that's one of the things that you want to look at. 70% of households that have children under 18, if the major wage earner was to die, they would have trouble meeting their everyday living expenses within a few months. It's not so pretty much they would be in trouble, could lose their house, could lose their car, could lose whatever they have. So their lifestyle. So you want to look at it from I'm helping my family maintain the lifestyle that they have as well. So it's more than just funeral services. You want to look at insurance as I'm helping my family, my children, even your could be grandchildren with their future. 40% of Americans who have life insurance coverage don't think they have enough. And I've seen this and I've made adjustments to my life insurance, and I'm always evaluating it with my wife to make sure we have enough to cover the things we need to cover, and have some left over. And we look at those different things and really evaluate what do I need as far as life insurance is concerned, and not just go with a $10,000 policy, $20,000 policy, et cetera, but go with policies that will help change my family's life. And I'll add this is not in here, but one of the things that life insurance is a tax-free benefit to the beneficiary. They do not tax life insurance. And a lot of times people don't understand you can use life insurance as a way to transfer wealth from one generation to another as well. And a lot of people use it for that, but just something just to hit people with. But anyway, if you have any questions, anything you would like to state, just feel free to ask questions. I know there's things going on in the chat, but I can't pull it up. So at the moment, but I can see that there's some questions there. Now, the no life insurance wheel. This is really important. This helped me when I talk to people, future clients. Family members can't afford to travel to your funeral. So this is a powerful thing, especially you pass, and if your children have problems getting to you money wise, etc., other family members, by having life insurance in place that will help them get to your funeral and say, well, I'm going to be gone. But still they want to come and pay your respects. They're already sad that you're passed, but they want to still come pay your respects, but they may not have the money. But if you have life insurance, you'll ease that burden of that travel. Also, families forced to cremate your remains for financial reasons. Now, I'll say this, we had to do this with my uncle because the only policy that they had was the policy my dad had on him. And my dad had passed, but it was paid up. Thank God for that. But the family did not, the children did not have it. We had it, but the children, his children did not have the money. And if it wasn't for that policy my dad had, then we would have had to come out of our pockets to help pay because they called me first. And everybody was calling me, like, is there a policy? And I'm like, yes, there's a policy. How much? I said, let me check. And fortunately, it was $10,000. We were able to cremate him, gave all the money to his daughter so that she can take care of the funeral expenses, which was a burden off of her back. So those are different things that have to take place. And also, cremations are getting more expensive. So you need to have some cash in a life insurance policy for your family. Also, there could be the need for grief counseling. When people lose family members, I've lost family members, and it takes a toll on you. So if there's the ability to afford grief counseling. That is huge for the family to be able to move forward without you. So you want to look at those different things as well. Also, no money to cover lost wages. If you have a mortgage, you have rent, and you're married, and the spouse dies, the husband or wife die, both are working, and one of the others working, then you lose that income. So now you lose that income, and then you may have to go move back in the house with your mother, father, or other family members. You may not be able to afford to live the same lifestyle that you are used to based off of the salary of your spouse. So you want to look at those different things. Family members have to go back to work before they're ready. Some family members need to take off and take some time just to get themselves together. And I've seen that when people say, you know what, I have enough money to take about 2, 3 weeks off, maybe a month off. And they're able to do that because they need that time to just get themselves back together after the loss of a loved one. And then family must repay your debts out of their own money. If your family is obligated to pay those debts, your children will get um, go through probate. So, and the debt collectors will come. So they are looking for money. They're trying to figure out how they can get the money, and they'll look at um, the beneficiaries, if they have money, and they'll reach out to them, or they look at the children, see if they can get money from the children based off of the parents or parent. So you want to look at that as well to make sure that that's covered and your children are not trying to figure out how to pay your debt. And then also no money for a funeral. This happens so often, and that's where you're seeing more of the cremations, but people don't have money for funerals, or they have to cremate and then have a memorial later on because they don't have the finances for funerals. So you want to look at those different things, and those are things if you do not have life insurance. Any questions here? Are we good? Anything in the chat that I need to answer?
No questions so far.
All right, awesome,
Good.
awesome. All right. Now, what is life insurance? And I like this little heart. It's love insurance. It's something that you want to leave behind for your family because you love them. And it's just, to me, that's just very important. Life insurance is the best source of providing a strong financial backup and support for your family after your unfortunate demise. We all are going to pass away. If we're able to leave something, a blessing to our family that will help them feel better, we're gone, at least we can leave something behind that will help them feel better because they're suffering from us not being there anymore. Life insurance is love. And then life insurance is an important part of a sound and structured goal-based financial planning. One of the things a lot of people they forget about life insurance and financial planning. It is good to have that in place so people know, hey, when you're gone, my beneficiaries are taken care of and give them instructions on where they need to spend money or put the money to take care of themselves and to take care of your obligations that you have. So you want to make sure that you have that as a part of your financial planning. Don't think that, oh, I can leave the life insurance out. Put that into your financial planning because it is very important. And then there are different types of life insurance that you can have, and we'll talk about each type. And I'll give you some examples as well of what they are, but they can help you save in a well-structured manner. And the younger you are, the more life insurance you can get, and the more time you have to save within a life insurance policy. And there's certain types of policies you can save in, and there's certain types you cannot, and we'll discuss those. Now, there are three types of life insurance that I'll focus on. There's term life insurance, and basically that gives you term a certain amount of years, up to about 30 years. I've seen some insurance companies go up to 35 years. And term is good. Some people say, oh, term is the only thing you should get. Some people say term is not good. Term is good, and it definitely helps. And is one of the most affordable options. So if pricing and you need a certain amount, start off with term and then you can build from there. But whole life is a insurance that covers you for the whole life. It builds a cash value within the policy that sometimes will increase the death benefit depending on how it's structured. And then you have Index Universal Life or IULs, and those are in there, and you'll see those pop up a lot. And so we'll talk about those. Now, with the term policies, basically you choose the coverage for the term policy, how long do you want it, how much, and then you pay those premiums. The premiums you pay into a term policy are going to be paid over time. You're not going to get anything back while you're living. It's going to be basically, if you pass during that 30-year term, then your beneficiaries will get that money, and that will be given to them. And again, it's tax-free. Benefits of this is more affordable than permanent life insurance. With that, and it has a larger cash value. So term, I like to use term. Somebody buys a home. Um, and say they have a home, say it's and nowadays it's not unusual, $500,000 home. So if they have a $500,000 home, they're paying a mortgage. You want to then have insurance that will cover the pay if you pass away, that home is paid for. So you may have to get $1 million worth of coverage to cover the home and cover your salary for a while as well to make sure that your family is taken care of if you pass away. So you want to look at coverage like that, and term is going to be the cheapest way to get there. And those are some of the different benefits there. And then you have whole life. With whole life, this is basically you're looking at a premium, setting a premium. You may have a certain amount of budget that you're looking at, and then you pay into that policy. It will pay out a death benefit, but it also grows a cash value. The cash value grows at a fixed rate, maybe 3, 4, 5%, but it grows that cash value. And then you can come and actually pull money from the cash value, or you can take a loan from it. So you can do either or with that. What this does, if set up properly, gives you the benefits, tax advantage, cash value growth, whole life policies. Of course, the lifetime death benefit pretty much will go to 99 or 100 years old. And then a lot of times what happens is they build the cash value up within those policies. They'll just start paying the premium from the cash value so that the policy will last for the rest of your life. And then also provide tax-free death benefits. All life insurance provides tax-free death benefits. And that's one of the big things that a lot of people don't know. That's one way to do it. But anyway, so whole life. Then you have IULs. Now, with IULs, Index Universal Life, they are the next step up from whole life. They're based on a whole life policy, up front. But then what they'll do is they'll put the money in, you have the ability to put the money into an index, like an S&P 500 index. It's not going to be in the stock market, but it's going to be in an index associated with the stock market. The good part about this is within the policy, that cash value, if the market goes down, you do not lose money. If the market goes up, you get some benefits, or sometimes they'll give you all the benefits, and then sometimes they'll plus up the benefits for you, or the percentages that you get from market returns. The cash value grows. You can, as you build this out, you can take loans from it, or you can withdraw it. What people are using these for is planning for the future, and then using it as a retirement vehicle. They're using it also to get loans for things that they want to get loans for, and then also for helping children in college if they start them early enough and there's enough money and growth within them. Benefits here again: wealth planning, estate tax advantages. Uh, Here, tax-free money. You can do key personnel planning for businesses. This is good. You have a key person, you can actually get IUL, or you can get life insurance, any type of life insurance on them. If they pass, you're going to lose some of the expertise that they have in the business. So it gives you the ability to go and buy that expertise from someone else, a consultant, et cetera, until you get to where you need to go. So different things like that help protect and grow wealth, and to meet your different financial goals. And the death benefit is going to be a mixture of the face amount of the policy and cash value. So those are the three different types of insurance. Any questions, any comments there?
So far, no questions. This is great.
Okay, awesome, awesome. Now, I'm gonna give you 10 reasons life insurance is important. And I add this to ease stress for your loved ones. We don't want our loved ones stressed out. It's already going to be stressed out that we have passed away. So we want to ease that stress. To pay bills, take care of the bills for your family. I have talked to people and they're like, I don't want to do anything or leave money for my spouse because she might be with another man or something like that. Different crazy things that you're just like, seriously? You have a spouse and kids that you love. You don't want to make sure that the bills are taken care of, they're not struggling. I'm like, that to me doesn't make sense. You're not going to be there anymore. So to save the family home, pay off the home. So this is another good thing to do. You have the home paid off. They're not struggling to pay a home, pay a mortgage, etc., or even rent. You know that's taken care of. To pay for your child's education if you pass and you pass early and untimely, and the children have not gone to college. This could be where you set up to say, hey, if I pass, this money can be used, a part of this money can be used to fund education. Also, you can build out policies for your children so that it can help fund education. And I'll show you how some examples of that here. To protect your business, if you own a business, you can protect that business. If one of the key people in your business passes, you have insurance on the different partners in the business. One of them passes, then you can use that money to help take care of things that they were doing, hire somebody, etc., to come in and do what they did for a short time before you make a permanent hire. So those are different things you can do with that. And also, if you have business expenses, it can help take care of those business expenses. You can use life insurance to secure your retirement. So this is another thing to look at. So this could be a part of your retirement plan. When I do retirement planning, I use a stool, four-legged stool, and you want to have different things on that four legs on that four-legged stool. Pension, you can have life insurance, you can have annuities, 401k, you can have real estate on there, you can have life insurance. And so those are different things that you can have as a part of your retirement planning, a part of having what I call multiple streams of retirement income. We talk about multiple streams of income, but you want to have multiple streams of retirement income as well. So this gives you the ability to have that. To also provide a source of cash during your lifetime. So this can help you build out cash and learn more about whole life and IULs. I've learned, oh, I can use this money and start building out my retirement or a cash reserve that I can use for later on. The younger you start, the more money goes in, and the more time you have for that interest to build up for that cash value that's there. Then also to cover end of life expenses, funerals, things of that nature, travel for your family, and burial. So you want to make sure you're doing those things and have the money to cover those as well. And then also to leave an inheritance. I love scripture, and Legacy Builders Wealth Management is built off of scripture. A good man leaves an inheritance to his children's children, is what I believe in. And life insurance can be used as a tool to leave an inheritance to not only your children, but also to your grandchildren. So, as they say in the world, in the streets, they don't have to start bring from the mud. They don't have to start all over as a lot of times we do in our community. We're all starting over from ground zero instead of having a foundation to stand on to help us launch for where we're going. So those are some different reasons why. And also to give your family control of their financial future. I've seen where so many families they lose that breadwinner and they don't have the money to take care of the children. They don't have the money to keep the house. They don't have the money to maintain the car or the lifestyle that they are used to. So you want to look at life insurance from that perspective as well and say, hey, I love my family so much. I want them to live the same lifestyle they're living, even if I'm not here. So that I think that is important. Any questions, any comments here?
None in the chat yet so far.
Okay, no problem. Now, let me show you some examples. I have quite a few examples to go through. I'll keep this as painless as possible. This is a 35-year-old male with a $500,000 policy. And basically what it does, the 10, 15, 20, and 30, those are years. So basically, and if you look on the left-hand side, you'll see 10G, and you'll see that they're paying $385.44 annually, or $32.12 a month. I'm not sure about you all, but I know I blow more than $32.12 a month on something that's useless. And so there, we want to look at that and say, can I not afford to pay life insurance? And the answer is no. You want to be able to pay it, and it doesn't cost as much. This is a 35-year-old with $500,000 worth of coverage. Now, would I recommend that they only do 10 years? No. But if that's all they can afford right now, at least do that, and then they can work on other policies. 15-year for 35-year, $500,000, 4268 a month. And basically that is, I know I blow more than 4268 on nothing. So you have to look at that. It could be Starbucks a couple of times, etc. And so just eating out one time right now, with inflation, I went out last night and spent over $22 on wings and a soda. And I was like, or tea. And I was like, oh, I was like, wow. I said that was an expensive wing and soda. But that you're gonna spend money. It's just where you're gonna put it. You're gonna put it just to help your family, so that they can live a better life, and maintain that lifestyle, and or even live a better lifestyle than what you gave them. 20 years, if you look at this, $50 a month. So basically 49.28, $50 a month. That's for a 20-year term policy. I would tell most people to start there. There's $50 a month in a budget that you can make sure that if you pass prematurely, your family's taken care of. And then 30 years, 80, 96. So it's going to be a little bit more expensive, but it's still something. Most people blow $100 a month and probably can't even figure out where they blew it at. But that could go toward insurance for your family and taking care of your family, because we just don't know when we're going to go. I'm thankful to live a longer life than what I expected. Um, but I made sure and still make sure that I have insurance for my family to cover the house, cover expenses, and so that they are good to go when I'm not here. All right. Any questions, any comments on term life insurance?
Terry, so as far as the term life insurance, is there a medical examination that you have to go through?
Sometimes.
Okay.
What happens with all insurance, to include term, is when they plug your social security number in, and we do the application, then they check what is called a medical, what is it? MIB. It's a medical medication board, for the lack of a better, I don't remember the acronym. I have too many stored in my brain. But what they automatically do and see, are you on any medications? And what this does is your doctors have to report all the medications that you're on. So if they show that you're not on any medications, and your weight is good, height, weight is good, they may just say, um, approve it. I've seen some get approved and they were like, they didn't even call me for exams. They saw that I wasn't on any medication, so no issues. But then they may also say, well, we want to do um, blood urine sample. They may, especially the older you get, they're going to ask questions and
Mhm,
they're going to get more intrusive.
mhm.
But for the most part, you don't have to take a medical exam.
Okay. And then I've experienced where they will actually come out to your home in some cases and, to draw blood or get a urine sample. Okay.
Yes.
Okay.
Yes. And they'll even do that, send a nurse out to do those types of things. Or you can go to a facility. And that's, the older you get, the more they're going to look at those. Younger
Okay.
you are, the more they just want to look. You're not on any medication. All right, fine. And they'll keep on going. If they see that you've had some medical history,
Hmm.
then that's when they may want to do an exam or they want to get blood work, et cetera, to see. And in some instances, they may want to do an EKG, and they can do that right inside in your home. They literally can come to you with all of that equipment and everything to get that from you.
That's good. And make it very convenient.
Correct.
We have a
Right.
question in the chat. Cashel asks, what happens if you buy a 20-year term and you outlive the 20-year term?
Then all the money you paid into that is gone. So the thing is, and is you want to look at what do I need now, and what can I afford now for insurance, and you may start off with that 20-year term just to make sure you're good, but in there somewhere, I would recommend doing a whole life or IUL. And also the another thing, and I'll share here as an example, you can do what is called the hybrid, where it's a mixture of whole life and term. So basically, you can do a 20-year term within a whole life policy and add cash to it so you can actually build up over time. And that term portion of it is taking care of you during that 20 years. When that goes away, then you're just focusing on the whole life and any cash value that you have added to that policy.
So Jake put in the chat. So it's kind of like leasing a car
Exactly. Yeah. Or car insurance.
or
Think
car.
about gold car insurance. When you do, if you don't get into an accident, what does most car insurance companies do not give you any money back.
Mhm. Yeah,
Just
true.
like keep paying that premium and don't get into an accident. And I would say it used to lower the premiums, but in Atlanta, our premiums keep going up.
Yeah. Right. Okay. Awesome. Thank you.
You're welcome. All right, so that's term. That's one. I have a couple more examples. This is a same 35-year-old, but what we did was an IUL policy. So with this, the face value is different. It's 200K. Now, his target premium, this is the premium that he would want to pay. This is change. This is up to 170.17. But what happens with this, there is accumulated value here. So most of that premium is going to a cash value. What that does is build a cash value over time, and that cash value then increases your net death benefit. So over time. So this is what that does for that person. The younger you are, of course, the more time you have, the more you can put into it. Now, with that, there's some other things in here. Let me see if I have that, and I do. With this same person, this is the same policy, except now he's thinking, I want to use this policy as retirement. I want to use this policy so I can have future cash value that I can pull from, or if I don't need it, then my children can inherit it, or my spouse can inherit it. So basically, what doing is putting 8,000 a month into the policy. Excuse me, 8,000 annually into the policy, 719.92 a month, and basically helping fund retirement or helping fund the future. So this is a way to do that. This is how an IUL can be used, Index Universal Life Policy can be used to have money in the future. If you look at this, say 16 years later, when this person is 50, there's 200,000 over $200,000. There we go. In this account, the cash value portion of it. The accumulated value, surrender value match. So you can pull this out. And this started off as a $200,000 policy, but with the cash value added is now over $400,000. So this is how you can grow money in an IUL policy for your future. And if you wanted this to be a part of your death benefit and you didn't want to use it, this is another way to build up cash value within a policy to transfer wealth from one generation to another tax free. Any questions here? I know I tossed a lot at you on those two.
No questions so far.
Okay, awesome, awesome, awesome. So that's IUL. Then this is another IUL, and that's normally IUL that's paid out monthly. This is another IUL. This is normally used for this particular type for people 50 and plus, 50 plus. What this is called is a lump sum IUL. They're what they're doing and focusing here is there may be people that have a lump sum of money and they want to put it, they have to be somewhat healthy as well. There's some guidelines. But you just answer questions on this one. If you answer all the questions properly, then they just approve it as long as they don't find anything, that doesn't match what you answer. So here, single premium, able to put 100,000 in, and they give you a 12% bonus for this. And this is one of the carriers that I work with, and I work with a number of different carriers. So now the layout looks as if you put 112,000 in because of that bonus. Your minimum guaranteed cash value is 100,000. What this can do is allow you to borrow from that $100,000, and you put 100,000 in, but you can now borrow from it. It will give you a death benefit of 148. So even if you passed away, you would be the increase that 100,000 would now be 148,000. So there's a bonus in that as well. And then with being in the index, you have the ability for it to grow. This shows you the guaranteed amount, if just basic amount. But this shows you alternative amount, and this non-guaranteed is showing you at a grade of 6.3%. If the index is growing like that, then you'll see how this can grow with you just putting a one-time deposit of 100,000 in. So this is another way to fund an IUL. You can borrow from it. This one you would have to borrow from it, and then they would reduce any money you borrow from it along with the interest rate on that they charge you for borrowing. But the cool part about this is you never have to pay that loan back. And also, loans are tax free. So if you do borrow, say you have a business, you want to pull 50,000 from here to start a business, then once the business is up and running and doing well, you can put that money back in, or you can have the business pay the loan back, and you can write that loan off, the loan payment off, because your business is taking care of it. So the different things you can do from a personal and business standpoint with this type of a IUL. Questions, comments here?
And that was for 50 years old plus and over.
This one, yes, normally it's 50 plus.
Oh, I barely qualify. Okay, got
Okay. I understand. I understand. Hey, 25, how many times are you 25 years old? We don't ask. Don't answer that. And somebody said, I'm 25 this many times. I was like, oh, okay, got you.
it.
Got you. All right. No problem. So yeah, so that's the IUL, the lump sum IUL.
Got it. Thanks.
This shows another lump sum. This was for male, the other one was for older female. And I did this just to show the female was 70 in her 70s, the male's 65. So with this, you see the death benefit for the male because of age is at 165, and the death benefit for the female 170, she's 73, was at 148. Normally, and when you look at policies, if they're the same age, they charge females less than they charge males, and there's a good reason why. Men live dangerous lives. But anyway, we do stuff that females don't normally do. I said that nicely. But anyway, all right, so this same type. Now, with this one, this is a hybrid. And with this being a hybrid, what this does is a whole life policy. And basically, this is for someone that says, hey, I have $1,500 a month I want to put into a life insurance policy, but I want to cash value out of this as well. So they want that. So what we can set up is we can set up the whole life piece. This is the whole life piece only at $14,967. And then the annual premium is $1,000 on that. But then we come down here, and I'm gonna go back up to the rider. We come down here and say, all right, they say, I only want to pay this for 10 years. And then after 10 years, I'll let it grow or do what it needs to do. So basically what we do, we put a term on here for 10 years. That term rider then increases the policy. This is 1,500, but it gives 149,000. So a little over around 160, almost about 165 in that ballpark. So about 165 here in thousand in coverage. But the reason we added this term piece was so we can add more money here. So now we have the ability to put in here on an annual basis 15,000 here, and they're basically putting $12,840 $1,284.67. There we go. Slow down. And out of that 1,500 is going to the cash value. So basically what they're doing is building the cash value up, but they're using the insurance policy to put that cash value in, and they're using the term to be able to put this amount into that particular policy. So it can grow and the cash value can grow over time. Now, what that looks like is this 18,000 a year. And basically, this person wants this type of person wants to set this up as a retirement or a supplement to retirement. So they're building this out. And the individual that asked about this is saying, hey, for 10 years, I want to be able to put this money in. And then if I want to pull from it, I can pull from it however I want to pull the cash value from it. So they have the ability to do that. The cash value will grow over time. The death benefit will grow over time. And then if they pull money from it, then that cash value eventually will be decreased based on what they pulled out of it. So this basically shows that. Any questions, any comments here?
We do have a comment in the chat. Natasha asks, is there an application process to qualify for IUL, or is it about coming up with the lump sum?
There's the same life insurance application process, and then of course having that lump sum. So if you have a lump sum, then it's just all right. Do I qualify for life insurance? Basically, if you do not have any health issues that they look at to disqualify you, then they'll be okay, here, we got you covered on this. And like I said, the lump sum is one of the easier applications that I see. They ask very minimum questions, but so if your health is good, then you don't answer any no to the questions that they ask or yes to the questions that they ask, then you pretty much can get it. And they're looking for that lump sum. So they've kind of eased up on some of their questions because they realize that some older people have lump sums, and this is one way to get it. But we're not going to ask all of the health questions that we would ask if they were just going for a regular policy.
Got it. Okay. Good question.
All right. Now, this one is for 8-year-old. Working with a client, and they want to put together a policy for their child. In this case, they weren't really focused on college, but it could be used for college. They wanted to, because they have a college fund already that we're building out, but this could still be used to supplement that. The big thing they wanted to use this for was, I want to build out cash so that my child at 40 can, one, still maintain this, but also have a lump sum available to him in this policy and probably in other places, but in this policy to do different things in life. So here, the target premium is 837. So basically, with this is the minimum annual premium that they would have to pay. So if the father took this out or mom took this out, then and the child couldn't afford to pay the 5,000 every year, they could just pay this 837, which is less than $80 a month. So, but they would, of course, you have to let your child know this. But with this, they're doing guideline level. This is the max they can put in here without it becoming a taxable vehicle, what is called a MEC, a modified endowment contract. What happens is this 5,000, most of this 5,000, because it's only about really $776 is going toward this premium. The target premium is a part of the death benefit premium and a little bit extra to grow the policy a little. But when you come over to guideline level premium, this is actually building out the cash value. So say, I want to build this cash value out so that my child or children, they can have more. So if you know, than what I have sitting somewhere that they can have access to for their future. What I like to do is go to when this child is 40 years old. When this child is 40 years old, policy like this is started. Now this child has the ability to have $500,000 sitting in a life insurance policy that they can pull from, and then they can make different decisions. It could be they want to put a down payment on the house. They can pull from here. They may want to buy a house. They may want to think about retiring and say, hey, I can retire or because I have the money here, I can pull money here for different things. Uh, Children, grandchildren, they may say, I want to pull money from here for my child to go to college and I'll pay for the college and then the child doesn't have to pay for college, etc. So there are different things you can do, but this is how IUL policy can be used for a child to build up a cash value for that child that they can go back to and then have that sitting there for them. um, and at 40 years old, I probably would have blew it, but today I wouldn't. But I would have at having $500,000 available to you, especially when you've been taught how to use it and what to do with it. That is a powerful thing. All right, questions, comments?
Yeah, that's powerful, and that's building wealth.
Yes. And that's what this is for. IULs are used for that. And I tell people the younger your children are started and put as much money as you can and tell them about it so they understand it. This is not for you to blow, but this is something to help grow and then use other different vehicles for that. And I love what you and Eddie, do y'all do real estate? So now, all right, I'm gonna teach you about real estate. We're gonna build out IUL for you. You're gonna, if you go work for somebody, you need a 401k, start a 401k. You can also savings and investments in other ways. So having multiple sources of income, period, retirement, or multiple vehicles that you can pull from for the future is powerful.
Mhm. Awesome, awesome.
All right, cool. Now, I added this just now. I found this. Go fund yourself with affordable life insurance. Don't get away from the GoFundMe's, get your family away from the GoFundMe's, and get life insurance so that your families are taken care of. This is one of the things that is so, so important. I had years ago, my daughter passed, and I did not get life insurance on it. She had life insurance, thank God for that. And but um, we were thinking about getting life insurance for her, but we didn't. And it's, oh, she's young, she's young. So you think, oh, she's young. But yeah, she was young, but still, young people pass away. And she passed away at 28, and everything was taken care of, based off of her policy and stuff like that. But what it did, it made me get life insurance on my son. And I was like, you know what? I should have had on both of them just so we could cover other things. And it probably would have helped me take time off to recoup and things of that nature. But I just kept fighting through it until I was better. It's because you just got to keep on going, doing what you got to do. But that would have helped in other different things as well. So, but make sure you go fund yourself with affordable life insurance. That way you can take care of your family and your family is not struggling when you're gone. Now, here are some of the services we offer: retirement planning, investment planning, insurance planning, as well as annuity planning. The next slide, you can screenshot this. This gives you my information, my phone number, email address, my wife's number and email address. Call me before you call her because I do most of the briefings. You can email both of us, that's fine. But my number, normally you can reach me. You also have the QR code. The QR code will take you to our website. And from there, if you want to put your information in, you can do a request for information from there. You can also set an appointment from there via Calendly from that link that you see there, as well as you can sign up for our webinars and seminars. I'm in the Atlanta area and basically do seminars here in Atlanta in the Smyrna area, and also do webinars on a monthly basis. So I have webinars tomorrow dealing with retirement planning, annuity planning, as well as life insurance planning. All right. And that concludes my briefing. I'm not sure if you all have any, or my presentation, if you have any questions for me, any comments.
Well, this has been just awesome. Thank you so much. I mean, just the wealth of knowledge. Trying to see if I think you answered most of my questions. Did anyone have any questions? If you want to put them in the chat, or you can unmute yourselves and ask your questions.
Hey, Pastor Precious.
Hey.
I don't have any questions because, like you, he pretty much answered
Yes.
everything that I was thinking, or somebody else asked the question. But I would just say that, this was great information. I believe it went more in depth than what I thought about life insurance. It was very well spoken and things like that. And hey, we know you get caught up on them numbers and things like that. But I think all of the information was very well delivered. So thank you for your time today.
Oh, you're welcome, and thank you.
And I think the what hit home for me, as Deaconess Jade was saying, just taking in consideration the grief counseling, expenses for traveling, money to cover lost wages and loss of income. So that, I never considered that. I have life insurance, but, now I need to reevaluate some things. So,
Right.
Terry, as we've already spoke before, we will definitely be getting with you, especially
Okay.
when our son comes home from college next week.
Right.
So,
Okay. No problem. No problem. Yeah, we can set that up. And that's the important part that I learned about life insurance that I didn't know.
yeah.
And as I studied and researched, I'm like, wow. I'm like, I see why, and you also see this is why different groups of people will put life insurance at the forefront, and then different groups of people don't, and you see a wealth gap.
Mhm.
And I was like, this explains it. And one of the big things, and you hear it, but you don't hear it.
Mhm.
Life insurance money is passing generational wealth on to your children and grandchildren tax free.
That's
And it hit me one day. I'm like, tax free. I'm like, this makes so much sense. Because now, and that's why they build policies and structure the way they're structured. So if they know the lump sum, for instance, all right, I got money I don't need to get rid of. If they inherit it, they're going to get taxed on it. But if I put it in this life insurance policy and they're the beneficiary, they're not getting taxed on this money. So they're getting free money. And I'm able to pass my wealth on to my children and grandchildren tax free. I was like, wow. I said this now I see,
yeah.
and things that we just didn't see. And you go back to the Bible and it says a good man leaves an inheritance to his children's children. And life insurance is one of the ways to do it.
Amen. Amen. Well, we thank you so much. This has just been so awesome. We're getting some great comments. Glenda says this was good information, no questions, well explained. And Ebony K thanks you for the information. And she missed out on the beginning part, but we have the replay available. So uh, I'm sure she'll go back and take notes for the things that she missed. But anyway, I think that concludes the session today on Life Insurance 101. And if you've liked what you heard today, this has been sponsored by the Grow Gathering. We want to invite you all to join the Grow Gathering at thegrowgathering.com. This is a place where you can get resources, mentoring, networking, community, and the covering that you need to walk in the fullness of your calling. So be sure to check us out. Join the Grow Gathering at thegrowgathering.com, and be sure to reach out to Terry Graham if you have any further questions regarding what he's presented here today. So thank you all for joining us. We appreciate you all. And again, I am Pastor Precious Waters alongside Deaconess Jade Williams. We are leaders of the Wealth Hub in the growgathering.com. So we have more coming to you we're tackling just different areas to create that legacy for our family. So thank you all so much. We'll be back real soon with more. Hope you all have a happy Easter.
All right. Happy Easter to you all as well. Thank you for having me.
All right. Thank you.
Bye-bye.
All right. Bye-bye.